4th of December 2025. I'm Mark Gardner. The S&P set a fresh record high last night, despite Oracle raising AI concerns. While there was disappointment on the revenue, the EPS was slightly better, but there are concerns, not necessarily about Oracle, but the people they've done deals with, basically OpenAI, and their ability to pay. So you can go and chalk up this forward guidance for revenue, but there are grave concerns over how many deals Sam Altman's gone and done, and essentially how much capital he's going to have to raise to just even facilitate those deals, let alone make any money out of it. So, as I'm sure a few people in the past have realised, if Wall Street smells blood, they'll happily let you fall and then pick up the pieces, rename it, and and set it back off on another IPO. Because capital is pretty essential when they're only making 20 billion, and they've done trillions of dollars worth of deals. But yeah, look, the S&P 500 did set a fresh record. The Russell actually this year has now equaled the S&P, or slightly outperformed it, which is a pretty impressive, because while all the talk's been about AI this year, Russell 2000 is a small cap index, and while the Nasdaq's still up, I'm going to compare the yearly performance just moving forward. Down in a few more slides, but I mean the Russell was up 1.2, the Dow was up 1.4. I mean, I don't even know why we quote the Dow anymore. The S&P is up 0.2, and the Nasdaq was actually down. So we saw a fair bit of selling in some of the related stocks around that Oracle concern, and the likes of Nvidia and Google and things. It was fairly flat in the Nikkei. In Asia, Hang Seng and China were down marginally. Eurostox was up about 0.86, but it pretty much opened at the bottom of the session. We were up slightly yesterday. We're up about 1% overnight, and as you'll see in a moment, we're actually pretty damn undervalued, in my opinion. Even within the S&P, there sectors we're strong in, like banking and materials. Their banking and materials are smashing our banking and materials, and that's all we've got. So, Australian fund managers need to potentially lift their game, or whatever. But look, we're looking at the market map here. Nvidia down 1.5. Broadcom was down 1.6, but then had earnings after the bell, up about 2 and a bit%. Oracle was worse. It's down 10, nearly 11%, but it was down 13 odd at one stage. Microsoft drifted higher by 1%. They talk about them diversifying their AI, basically. Google down 2. That's probably, I would say, on the back of pretty strong performance over the last few weeks. I think it probably needed to settle a little bit and maybe consolidate some of these gains. Tesla and Amazon marginally, just whatever. But the banks, obviously, and MasterCard and Visa, because consumer spending and that rate cut, blah, blah, blah. I think we've done exactly what we've done all year, and read all the good news and ignored all the bad news. And that's where we've rallied. Conversely, in Australia, we've read all the bad news and not read any of the good news. So you've got to read the sentiment and you've got to read the signals in these markets, because if you applied fundamentals to this game, the S&P would probably be about 10 or 15% lower, and the Aussie would be maybe a little bit higher. I would have thought, but it's not a maths game. In the short term, it's definitely a sentiment game. But Eli Lilly went to a new high as well. Late stage trial results for a next generation obesity drug. Patients were losing on average 28.7% of their weight, which smashes that Zepbound and all the other drugs. So they're doing quite well. It is late stage, but the healthcare sector was generally up across the board, and we saw the likes of Newmont, etc. continuing to rally, but as you know, it's very hard to talk about them or identify where they are on this heat map because I think Nvidia is bigger than the about 12 sectors combined. So when that market map's done by market cap size, it's a little bit harder to notice the little guys. My old mate Silver just absolutely smashing it yet again. It gave away 1.5% to 2% in the Aussie session at one stage yesterday, and then since about midway through the session, but just ploughed on higher. I think it nearly got above $65, I believe. And I'll just double check that because it's probably a pretty key level. But the momentum there at the moment is seriously massive. There is talk of there's margins being increased on COMEX to hold futures by 10%, which doesn't sound like a lot, but it actually generally is because they generally don't move them. There's a bunch of rumors floating around that there's way too many contracts being wanted to be delivered and not enough inventory for them to deliver. So silver got to nearly $65, $64.70. So done extraordinarily well in the year. As you'll see in a moment, gold was up 1.3. Silver for the first. This is like the 10 times bridesmaid finally becoming the bride for silver. I think the new bridesmaid's probably copper because it's performing really well, but no one's talking about it. It's going to record highs. Platinum made a little bit of a bounce back, but look, it only up 3% for the week. That the things like platinum, I would imagine they'll eventually catch up to silver. Or if there's any geopolitical issues involving BRICS or Russia in particular, you'll start to see pretty rapid spikes there. Lithium, another great performer for the week, up 7%, but was flat yesterday. Crude coal, iron ore and coal, as you'll see in a moment, just doing their normal thing of going nowhere or lower. So 2025 index leaderboard, and I'm just going to do Australia and the ASX for the moment. Otherwise, there's too many lines on this chart. The candlestick chart is the Australian market down 5% since January the 1st. Very disappointing. I mean, we probably ended the year with the banks a little bit too high. I think the materials sector is still undervalued, and our tech's been belted, and I can't for the life of me work out why. Considering the Nasdaq, the tech index is up 22% for the year. So, but we did this time last year, and banks were the highest, and materials were down 17%. And realistically, I was pretty publicly vocal about you need to make that switch, and that trade's been 30 to 40% this year. It just hasn't because one's come off and the other. It's been more a rebalance. It hasn't been a rising tide floats all boats. As you can see here, the Nasdaq up 22, the S&P up 17, the Russell up 16. They didn't have today's daily settlements, so the Russell would have just probably be about 18%. I did this before the market shut. Look, it means that overall, I think if we get some form of China recovery and an upward move in iron ore, and given those employment numbers yesterday in Australia, really, I can't believe I'm about to say this out aloud, take rate hikes off the table for February, which was the most ridiculous concept anyway. But I mean, I think we can play some serious catch up. We're up 1% overnight. I can't see any reason why we can't rally and outperform leading into when we're against it. We normally go along with the Russell a little bit, and then that's a massive gap. I've got to say, and there's some high quality companies in that index. So, whether it waits and doesn't happen until next month, like last year where the rebalances sort of started at the start of the year, I don't really know. But I think at this stage, we're pretty damn cheap. So. Commodities leaderboard, silver from the first, this is from the start of 2025. Silver up 116, platinum 85, gold 62, copper 33, which is it's a good move for copper, like relative. Iron ore's flat, coal down 16, oil down 17, and that's back-to-back crappy years for the energy sector, for oil particularly. And I would suspect that there's something that I've looked into that people have referenced in the past, like the gold to oil ratio is at a record apparently as well. So didn't really realise that was a thing, but I mean it only really comes up when they're at extreme levels. Gold is incredibly cheap against other commodities at the moment. That could be to do with energy transition, the rise of nuclear, things like that. But I would expect they're probably going to play some catch up next year. You're going to get all of our views on that in the MPC Markets Market Outlook for 2026. About 40 odd pages, five themes to watch for 2026. Just go to mpcmarkets.com.au/mpc-markets-2026-outlook. And you can sign up there and get that free. There's going to be a webinar on the 15th of January as well, which you can watch later on. That'll have more actionable stock picks. This is more the macro. Obviously there's no specific stock picks in this one, but we will release the stock picks, particularly to our subscribers on Mosaic. It's and I've also released a bit of a teaser article on Livewire today. If you want to go to livewiremarkets.com, sort of get a bit of an idea of the general theme of things. Last year we did quite well, 80%, roughly right, and then and this year particularly, we've our three best themes have done extraordinarily well. So worthwhile having a look at, just to and prepare yourself for 2026, because realistically, I think it's going to be full of potholes or minefield, a bit full of landmines or whatever. And I think it's one of those years where you need to be in themes with a tailwind, and it's not going to be a good year for index players. Coming up, I wouldn't have thought. So for those of you in sort of index ETFs, you've done extraordinarily well. But as you can see, with that Russell coming back now, people are starting to rotate out of these big caps into the smaller caps. That index stuff's not going to work this year in 2026. So bank your profits and get into some individual stocks. But that pretty much wraps it up for today. I think the SPY should do pretty well today, and I think it's got a fair bit of catch up. If we're going to stay around here until the end of the year, which I don't really see, there's no earnings to derail it, there's no economic figures to derail it in the US, we're probably just going to grind higher. I think the ASX is 5% too cheap, at least, and we can get back up to that 9,000 area. What it does from there is, I'm not exactly sure, but one thing that the last 2 years has taught us all, don't swim against the tide. Anyway, have a great day, people, and have a great weekend. Make sure you listen to Bulls versus Bears, myself and Jonathan Takaduna this afternoon on the podcast, and we will speak again Monday.